JP Morgan just went on a Bitcoin shopping spree, upping its stake by a massive 64%.
Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. All right, let's kick things off with the market overview, and it is looking green out there. Over the last 24 hours, the total crypto market cap has pumped a solid 2.7%, bringing us to a cool $3.57 trillion. Bitcoin is leading the charge, climbing 2% to hit $103,000, and Ethereum is looking strong with a 3.6% gain, now trading at $3,420. But the real story today is in the sectors. The DePIN sector, that's decentralized physical infrastructure networks for the new folks, is absolutely on fire, rallying a massive 20%. And the star of that show, Filecoin, FIL, which just soared an incredible 40%. You love to see it. The big boys like Layer 1, PayFi, and CFi are also seeing nice steady gains of around 4 to 6%. A great day all around. Now for our top story, the big fish are getting hungrier. JP Morgan just made a serious move, significantly upping its exposure to spot Bitcoin ETFs in the third quarter. According to their latest filings, they scooped up another 2.07 million shares of BlackRock's iShares Bitcoin ETF, you know it as IBIT. That brings their total holdings to 5.28 million shares, valued at roughly $333 million. That is a whopping 64% jump from their position in June. Now, to be fair, they're still playing catch-up to giants like Goldman Sachs and Millennium Management, but seeing a name like JP Morgan increase their stake this aggressively is a huge signal. And speaking of ETFs, after we finally broken the streak of 6 straight days of net outflows that drained over $2 billion from the market, the spot Bitcoin ETFs have flipped the script. On November 6th, they posted a net inflow of $240 million. But today we just see another $558 million outflow again. Seems like markets still prefer a riskless weekend. Next up, let's talk macro. Federal Reserve Governor Stephen Miran dropped some fascinating comments at the BCVC summit. He highlighted stablecoins as a potential powerful force in the economy. Now stick with me here. He argued that as more people use stablecoins, it increases the amount of money available for lending. Basically, more supply could push down what economists call the natural rate of interest. Why does this matter? Because he's suggesting the Fed needs to factor this into their decisions about setting interest rates. It's a pretty dovish take, especially with all the political chatter about rate cuts. A Fed governor acknowledging the fundamental impact of stablecoins? That's not something you see every day. And you know we can't go a week without talking about MicroStrategy. Michael Saylor's company is tapping the global markets for cash. They've just priced a new perpetual preferred stock, ticker STRE, raising 620 million euros, which is about 715 million US dollars. And get this, it comes with a 10% annual dividend. That's a huge yield, and it can even go up to 18% if dividends are deferred. Investor appetite was so strong that they ended up doubling the size of the offering. It looks like after tapping out fundraising options at home, MicroStrategy's global roadshow is proven to be a big success. Finally, in the venture world, a really interesting strategic play. Tempo, a blockchain project backed by giant Stripe and Paradigm, just made its first investment. They're putting $25 million into a crypto infrastructure company called Commonware. But here's the kicker. It's not just a check. According to a blog post from Paradigm partner Georgios Konstantinopoulos, Tempo is becoming a core partner, integrating Commonware's libraries and helping build it out. This is a perfect example of the lines blurring between traditional payments, stablecoin ecosystems, and the foundational tech that makes it all run. Super smart move. That's a wrap for today's update. Catch you tomorrow, same time, same place. Cut through the chaos. Focus on what drives the crypto market. Stay on top of crypto research, all in one place at SoSoValue.com.